Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. Hey there, this is Tim. I want to thank you for dropping by to watch this interview. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with a new company CEO interview here. It's an OTC company, which is, something that I don't typically do, but this is one that I think everybody's going to recognize and I think may understand the potential opportunity that lies ahead. And the company is called Mace. Is anybody familiar with that name? Like pepper spray, that may be the first thing you think of, but Mace does a lot more than just pepper spray. And they've had a rough road over the last, I'd say, course of what? Sanjay, what's it been? Probably 3 years that it's been a pretty rough road?
Well, it's probably longer than that, probably 10 years, if you look at it that far back. But the last 3 years have seen lots of ups and downs, lots of up quarters. But then 21 was, the back half of 21 was tough. Beginning of 22 was tough. And then Q3, we were back to positive adjusted EBITDA.
All right. So Sanjay Singh, is it Singh? Am I saying that right? Okay.
Yes.
CEO. Were you the prior to the CEO role, you were on the board?
I was on the board. I was the vice chair, and then I became chair in April of 2020, and then I took on the CEO role as well after a prior CEO left. So I'm now chair.
What brought you to Mace? What originally got you into Mace?
Two things. The brand name, of course, being a local company in Cleveland, Ohio, where I am based as well. Certainly the brand name and the potential to grow. When we did our diligence, what we found was that the company needed a strategy, a very well thought out strategy. And one of the areas that seemed like a great area for improvement was their direct to consumer segment. along with retail. To sell to a retailer, to land a new retailer, it takes 12 to 18 months. So it's a much longer term horizon, but then you have very high repetitive, weekly POs, revenue streams. Direct to consumer is more immediate. It is quite adaptable, flexible, so long as you have a great marketing team or resources. But it does require a significant amount of investment, because it's not like you can just turn on the faucet and drive sales at a meaningful, positive cash flow level. So, for instance, I've mentioned this on earlier earnings calls. We try to shoot for a ROAS of between 3 and 4x. So you spend $1, you get $4 in revenues, and obviously the gross margins are significantly higher. So net of advertising, you still end up at 25-30% EBITDA. That's sort of been our goal, and but those two things are what got my attention. It was the idea of how do you now execute, and how do you do it in a thoughtful manner. It's a small company, so it doesn't have any middle management. And how do you maintain the focus between shareholders and outsiders versus also focusing on the inside, working on the business and in the business.
So what I mean, Mace wasn't your background. I mean, that's what was your background before you got involved in Mace?
Before I got involved in Mace, I was running a tooling company, a privately held, family-owned tooling company. I'd met the owner about 20 years ago, and when he heard that I was moving back to Cleveland, he asked me if I'd, run the company with him. And so I did that for about 8 years, and my background is in finance. I've been with my share of Fortune 500, Stanley Black & Decker, Rubbermaid. Prior to that, then I went into private equity. I was with two different funds. One is Riverside, which happens to be based out of Cleveland, and they owned the largest door and cabinet hardware company in North America at the time, and that was growing at a double-digit rate. And then I also worked for another family office owned company. That was for about 5-6 years, and they were in the tooling business also. So I've been consumer products, manufacturing companies. The company where I worked before the tooling company was a service company with almost 1,000 employees, also privately held.
Okay. So is this your first rodeo with a publicly traded company then? In this type of position?
In this type of position, yes.
Yeah. It's not always fun, is it?
There's a lot to learn. I've learned a lot, especially about operating a small company with an amazing brand name. That comes with huge expectations, but the resources are limited to execute, both on the personnel side and also from a cash flow perspective. It's not like we're sitting on $25-30 million of cash on our balance sheet.
So the background on Mace, at one time wasn't Mace was doing extremely well at one time, right? Very profitable company. And then what happened? I think they diversified into a whole bunch of businesses that had nothing to do with what Mace actually does, right?
That is correct. That's my understanding as well. Mace was doing well, and then it branched off into owning car washes. Then it owned a security monitoring company at one point. Yes, and then all those things in the last 10 years, since the company had relocated to Cleveland, all those things were then unwound over a 7-year time period, right before we got involved as investors.
Okay. Now, I think you told me a stat once that Mace is, as far as recognition, brand name recognition, is in the, it's pretty high up there, right? I don't remember exactly what the stat was, but
Yes, that is correct. We had a local company of national repute called Nottingham Spurk. They're the folks who are behind the electric toothbrush, and they've designed several products for Procter and Gamble and other companies. We had them do a double-blind survey, and the Mace name had recognition of 80%. It was 4 times more than the other brands out there.
so that to me is an amazing statistic, right?
Yeah.
And I think done right presents a huge opportunity to really build something significant.
That is correct. In the same survey, the consumers did not list the brand as the only, decision making priority for them. While the brand was very recognizable, the consumers clearly hinted at innovation as being something that this industry needs and requires, because the products have mostly looked the same for many, many years, which is the reason why we're doing a lot of these co-branding deals. We introduced 2 new products this year. One was, one that looks like a regular pepper spray canister, but in reverse. It looks like a little gun, but it's not a gun. And you can keep it in your handbag. It's like a pocket pepper spray in the Apple iPhone colors. That's what we started out with, and then there's another product called the Chameleon that we launched, and then we are now launching a mobile pepper spray that will sit on automobiles and trucks. That's called F3. We just struck that agreement in the last quarter, and then we're working on 2 other pet-related products, outdoor walking. That should be coming up soon. We're working on the supply chain.
So, pet-related products, I think that's a huge market. I think you and I have talked about that before. That is, but the way you're doing this is a little bit different, right? You're not doing this R&D in-house and going out and building a prototype and doing all of that. You're doing this in a different way, right?
Exactly. We shifted gears earlier this year. Prior to that, we were doing it in-house with some expertise from the outside. Our former CEO was, the concept person and designing these products. But now we've done two things differently. We've gone out to outside parties, and we've told them that if they can help design a product that they think will sell really well in the personal protection space, we will take a look at it. But the agreement is that they will get a piece of the action. And the same with inventors. Inventors come to us. They like our brand name for obvious reasons. And if we like their product, then what we do is we take over the packaging aspect of it, because that's a big driver for our recognition of our products. And we also take over the supply chain. We negotiate directly with the vendors and give them our sales forecast. And then the inventor also gets, a small royalty for their efforts. But that's our framework. We don't commit to any minimum inventory quantities with these parties. We're small. We have to use our capital very thoughtfully, so it gets us positive cash flow quickly. We're just not at that point where we can have a separate R&D fixed cost type of situation. I think as the company has continued to be in the retail space, and it will be for a while, Ours is an omni-channel approach. You're always going to see the ups and downs in volumes when things slow down with certain retailers that are price sensitive, and having those fixed costs, can be a huge issue for a company that is small, and having that kind of exposure to that kind of risk. So we just simply can't afford it.
And that makes sense. I mean, you're going through and I didn't recognize this until you and I had spoken, but I view you guys as I view you as a safety and protection company, right? But that isn't always the view out there with some retailers and other businesses that could impact your ability to sell through at certain places, right?
Right.
And they view you as what? A weapon, right?
Some of them do. Some of them, see us as a huge value add because of our name. So, for example, Dollar General, looks at us as something that is much needed, a product that is much needed for their audience. So does Walmart. And then you look on the other side, automotive retailers like AutoZone, for example, or even Dick's, which is at a very different price point, with their end consumers. So there are some that, view us with the risk of having a weapon on their shelves, but a large majority that we're talking to and are interested in see us as a non-lethal option. It's our job to, get the folks on the other side to recognize what is going on. We show them the stats of the crime waves and how people are seeking out personal safety devices. It's becoming a norm to carry alarms, in backpacks and in your hotel rooms if you're a traveling executive, and options like that. Things that are happening in larger cities. There is a cadence of fear that is now at a much higher rate than 10 years ago, and I think retailers are opening up to that. But the more we get our blogs out there, the more we do our Google ads out there. When people search for Mace, they land on our website. 50% of organic searches for Mace, that is the rate of our search efficiency and brand recognition. They land on mace.com. So that's the breadth of our recognition. It is fine-tuning our approach with the limited resources we have and allocate our efforts in those. And that is what has led us to partner also with one of the largest firearms training companies in North America, that was now going to offer non-lethal personal safety training, is also going to offer situational awareness training. And they have a technology platform to offer this curriculum in stores and also online. And we are now being seen more and more as the experts. And that will really put us in a very different category of a last minute impulse sort of purchase to a lifestyle, brand, that we offer not only the products, we offer innovative personal protection products along with access to training. So anybody that is interested in personal safety will see Mace as the expert on personal safety. We would like people to come to our website or our store on Amazon and look at all the variety of products that we carry, not just pepper spray. We have pepper gels, we have personal alarms, we have bear sprays. So we have muzzles,
you have stun guns, you have
we have gun devices. Yep.
right?
Yep.
And those products now, I mean, and let's just take a step back because I think it's important to highlight this. You've got what you're saying is, look, we're not going to go out and spend a bunch of money in our R&D and, building prototypes and all of that stuff. But if you're out there and you've got an idea for a personal safety protection product and you would like to have that associated with the Mace name, which to me is all about personal protection, bring the idea to you. You'll sit down with them, and if it makes sense, you're going to move forward with them, right?
Absolutely. Yes.
So
Yes.
To all you inventors and geniuses and brilliant minds out there, that to me sounds like a fantastic opportunity, right?
It's a fantastic opportunity. I mean, in fact, in the next week or two, I'm talking to a company that is in a completely different space. It's not even pepper spray, but it is related to trauma that is caused by an attack, a personal attack. And, we look at our company and our bandwidth in that area of personal safety to even be able to offer those kinds of products. And again, there is no working capital investment. It's a partnership. It's a co-branding. There's an inventor that's invented an awesome device. They need a platform to get the product out there. They don't have the resources. So they partner with us. We offer scale. And we are very conscientious about the use of working capital. So we have framed our economic model that way, that we can work with them, sit down with them, flesh out the design, agree on packaging that abides by Mace brand guidelines, and offer those products. And across all channels, whether it be our base business of gun stores, independent dealers, or retailers, or even online.
So I'm having these thoughts right now. When we get off this, when we shut this down, remind me to talk to you about two companies that I definitely want to introduce you to, because I know there's going to be some synergies there. But
Okay.
The way I see things, and personal safety, I think, is becoming more and more and more important every day. I mean, I see stories that I can't even believe I'm reading, actually, because I don't know what the hell is happening to society, but human life doesn't seem to have the respect that it used to have, right? I mean, people killing people because they put too much mayonnaise on their sandwich at a Subway, the employee. I mean, some of this stuff is just like unbelievable to me, right?
Yeah.
This divide between race, and I'm not just talking, Black Lives Matter. I'm talking the Asian community, right? There's just a lot of crazy stuff, it seems like, is happening to me. Would you agree with that or no?
Oh, very much so. I mean, I think you're probably familiar with the idea that our mission statement is one of empowerment, and so we've been partnering with a not-for-profit for the last couple of years to advance their cause in any way. So, for example, we worked with the City Mission of Cleveland to do a drive for their residents for socks and toothpaste. Or even hire some of their residents who are ready to go back to work and have a program with them. We have worked with women's shelters, and one of the not-for-profits that we worked with closely, we made donations to them, was an organization called Soar Over Hate in New York City. And one of their co-founders is now has been nominated for one of the CNN, people who give back or who make a change in in society. She's been nominated for an award recognition, but they carried our free pepper sprays because they offer support to Asian Americans who've been traumatized or who've been hurt. So they even have psychologists on staff that offer, volunteer their time. But we made donations of pepper sprays to them for their population, and because that was one of the cities that saw a significant increase in crime towards Asian Americans.
So Mace was started in the good old US of A, right?
Yeah, in Pittsburgh.
Yep. So American brand, and in a powerful brand in a huge category that I think continues to get bigger, right? Because of this divide, the social divide, and all this. And I'm not just the LG transgender community. I mean, it's just everywhere. It seems like to me. So there is definitely a need for your product. I wouldn't even call it a want. I would call it a need, right? People need to learn how to protect themselves, and be, I don't look at your products as weapons. I look at them as protectants, right? You're trying to protect yourself from harm. And there are a lot of things out there that can potentially harm you. You mentioned the pets, and I do think that's a big, just as an example, I've got a dog, I take her for a walk, and somebody doesn't have their dogs on a leash, and you got two big German shepherds running up on you at full speed, that will get your attention quick.
Yeah.
Right? I mean, fortunately, nothing happened, but it doesn't always work that way. There's stray dogs, there's coyotes, there's all kinds of things that can happen that you just don't anticipate. And when you're standing in the middle and all you got is, a leash and your dog, and if you're outnumbered, that's not a good situation to be in, right?
Right.
So having something like mace or pepper spray or bear spray or whatever makes a lot of sense to me. Right. I don't know what product you've got coming out, but hopefully it's something that has been well thought out. And I would imagine if you've given it the green light, you must be pretty excited about it, right?
Well, we are. We're very excited. We've even shown the product to our retailers. They like it. So, and it's a sector that, has been our focus for a while, but I think during the pandemic, a lot of people were outside and going on walks and taking their pets, and so we really moved it up on a priority list.
Sanjay, let me ask you a question. I mean, if there are guys out there, influencers and stuff that are all about personal protection and stuff like that. I mean, have you looked at any possibilities of finding like brand ambassadors that can go out and, I mean, I know that you are active in like domestic violence, and you participate in a lot of those types of things. This firearm partnership, that's a big deal, right? As being trainers, and then I just keep thinking about actual influencers that could really become brand ambassadors for you. Have you looked into that at all?
We have. So going back about 5-6 years ago, even, we had a former, she was either CIA or FBI, I forget. It was right when I joined the board is when she had, terminated her agreement with Mace. It did not result in a meaningful return for the amount we were spending. And maybe the reasons were different then. Today, our limited marketing dollars go to ad spend. Mm-hmm. And so we're going after what is a little bit of a balance between the top of the funnel, which is where influencers will cause a lot of people to come to your website and check it out, but they may not necessarily be buying it. But you also want the bottom of the funnel, which is the people who are actually adding revenues to your revenue line on your income statement. So we're spending money on both, on the bottom as well as the top, but we don't have a surplus of, funds to go fund some influencers on top of that. Now, we've had plans to do that be on other social media platforms and add influencers also. That is all top of the funnel.
Mm-hmm.
We will need to get there as we can, be in a consistent, profitable state. We'll get there. But
Right.
That's what's holding us back.
That makes sense. So just a little history here. You guys were basically providing your product to companies. You were like white labeling, right?
Right.
And you've gone through a big transition there, right? You got away from the white labeling because the margins aren't there for white labeling. A lot of revenue, a lot of volume, but the margins aren't there, right? And
we're still in that segment. We're still in it, but we, 2 years ago, we lost a sizable customer that went and started their own facility.
Right. Okay. And pepper spray is pepper spray, right? I mean, it's pepper spray. So it's not like you have a patent on pepper spray, right?
Right.
So, however, you do have the brand name and the brand recognition. And that leads to, and again, I just go back to, you're a personal safety company, right? That's what you are, whether it's pepper spray, stun guns, or, any of the other products that you have. It's all about the training. All of that is about personal safety. Mace is just the launching pad, right? And really what you're working on right now is changing that perception that Mace is just a pepper spray company. Right. Which is, I think doable, right?
Mm-hmm.
Right now, because of the path that you've gone down. I mean, let's look at it. You just went through a pandemic, and now we're in a war and supply chain issues and all kinds of stuff, right? Some inside things happening internally there, right? Management changeover, but you've been there. You're like a tenacious fighter, right? You don't lay down very easily, do you? Huh?
I tell you, running a small public company with just an amazing brand name, you got to persevere and fight it out. I mean, it's a slog. And again, like I said, if the company had $25-30 million sitting on the balance sheet, for example, yeah, we could go out and do the influencers and not, be more focused on top of the funnel than also on earnings. But for us to maintain our revenue growth and our earnings growth, and being a small company without the balance sheet, you got to slog through it. Yep. Yep.
But so let's mention the fact that you are going through a strategic review, right? Meaning that you're kind of exploring all options, right? Whether you stay as an independent company, or maybe it makes sense to do a joint venture, or maybe it makes sense to be acquired, right? I mean, you're kind of exploring all options right now.
Right.
And you've been in that process for quite a while, right?
Yeah, about 5-6 months.
5-6 months, right?
Yep.
So I would have to assume that you're probably getting close to a, right?
Yeah, we are.
Okay.
We're getting to a point where we are looking at our future projections, future initiatives, and to see what our needs are, what our cash flow needs are. Can we self-fund? Will we need a significant amount of outside funding? So we're going through all of that right now.
How many shares do you have outstanding, fully diluted?
About 65 million or so.
65, and that's fully diluted?
Yeah.
that's really nothing, right? I mean, 65 million shares is nothing. I mean, if it's actually anything under 100 million to me is a very I guess I would call it a thin stock, right? A thin stock.
Right.
Because but you are on the OTC. There are challenges. OTC stocks are thinly traded, right?
Right.
And that's where I can see where the strategic review is. You know, if you can fold into another safety type company that's in a much bigger, you know, better position, then it's easier for you to grow, right? You're just not there right now. But I think you've put the company back on track because you just got back to profitability, right?
Right.
You don't plan on going backwards, do you, Sanjay?
That's obviously not the plan. And you know, just looking at the ebbs and flows in the economy, I mean, that keeps me up at night. You know, when you're hearing about slowdowns, you're seeing it. You know how that impacts us. And again, we've got a decent portfolio of retailers, and so that does keep.
You just added a big one, right? Dollar General. I mean, they're popping up everywhere, right?
Right.
So that was a good one. And let's go back real quick. Back a while back, you weren't even really direct selling on Amazon, right? I mean, you were paying no attention to the online market, really. And what kind of growth have you seen there?
Yeah, so we started selling on Amazon in earnest right before I became involved, but it was more a seller central type strategy, meaning have a store on Amazon and sell through the stores. The prior CEO changed it. We became a vendor because our margins were very low on the seller central. And then after I joined, I partnered with another company that has done a fantastic job, and they helped us grow about 400 odd percent in a 2-year time frame. Now that was as of the peak in 2021. Since then, Amazon activity has declined, but again, it sort of goes up and down on Amazon. The volumes can swing by a lot. And we can see that ahead of time because we monitor the glance views. And so once the glance views, change, or the pepper spray keyword ranking changes, we then, change our ad spend as well. We'll spike it up or take it back down because you're not going to see the revenues. But that has grown a lot. That is very true.
Interesting. So look, I would say this, and I want to bring up the chart real quick, and it's not going to be a pretty chart, but that's okay, right? I'm going to go back to a longer term chart. So look, have they done reverse splits? No, right?
No.
There's no need to. I mean, your OTC, why would you do a reverse? But this stock at one point was $28 a share.
Yep. And it was on NASDAQ too at the time.
It was on the NASDAQ. So you got booted off the NASDAQ for compliance, right?
Right.
I mean, in your head, Sanjay, would you want to go back to the NASDAQ at some point?
We definitely should uplist. We should grow the company, have a few successive quarters of positive results. But yes,
I mean, I would say, and I always tell people this that are contemplating going to the NASDAQ, the NASDAQ isn't going to fix everything, right? I mean, it makes things nicer. It's not so thinly traded, but if you don't have all your ducks in a row and your engine isn't working flawlessly, then you don't have wind at your back, you're actually going to have a difficult time, right? Because you're going to uplist and then you're going to spend a whole bunch of time trying to stay uplisted, right?
Yep.
I mean, you just have to be really in growth mode. Sales are a hockey stick, and you don't see any sign of that slowing down, right? And I'm not saying that you guys can't get there. I think you can. I think the company lost its way. I think it's finding its way back. You're focusing on what you should be focused on, and you mentioned it earlier, and that's becoming the experts in the space, right? There's tremendous opportunity there, and then there's that also that changing people's perception of, you guys aren't out to do harm. You're out to protect people. You're out to save people, right? Not harm people. That is, if you have to use your product as a result of something threatening to somebody, that's the way it is. That is, hopefully that's what saves that person's life. And I think that's pretty important, right?
Yeah.
So, I look at the stock and I look at where you are at, and it's, you're sitting at around 15 cents. If you're back to profitability, you don't see any reason to do a capital raise and dilute the shareholders anymore, do you, Sanjay?
We are, that is not something that has been discussed by the entire board at all. So, I can't comment on.
Yeah, I know. I mean, you can't tell them. I understand.
Yeah.
But it's not to say that it couldn't happen. Maybe there's an opportunity comes up for you guys to acquire somebody. I don't know. And then maybe it would make sense to do that. But at this particular point in time, I don't see that there would be a need. You've gotten back to profitability, and now you're working with this. What do you call that? Co-inventing or co-branding or?
Co-branding deals. Yep.
Co-branding, which could be a home run in a way, right? I mean, you've got some things. You've got Dollar General. When did you sign them up?
Q3, end of Q3.
Okay, so that's really just going to start kind of rolling, right? I mean, you're going to start seeing those numbers.
Yeah, in 2023.
Okay.
Yeah.
I mean, so you've got some real positive things happening here, right?
Yep. Yep.
I look at the risk reward. So if you go bankrupt, you're risking what, 15 cents? That's your risk right there. And that's if you go belly up. What's your upside? What's the potential reward? If you guys continue on this path and gain momentum and come out with some really compelling products, I would say your reward is pretty significant, right?
Mm-hmm.
I think if I'm looking at the chart, there's a big area right about, so right about 80 cents or so, 75 to 80 cents is an area of resistance, right? But then once you take that out, then it's the $1 holla. And whenever you can get to a round number, that's when psychologically you're no longer a penny stock, you're a dollar stock, right? And that's when things can get really fun. So, it does get volume too, by the way. It's not like it always trades super, super thin. You do get some pretty decent volume days. But I think this is, are you committed to the story, Sanjay?
Very much so.
Are you I know it's a fight, but are you having fun?
We have a very good team, and it's fun. Our board of directors is very supportive. Great folks on the board, and there are shareholders like you, and that are very supportive and provide a lot of good ideas. No, it's great.
I'm pulling for you, right? I mean, I'm pulling for you. I'm pulling for the fact that it's a U.S. made brand, and there's a lot of history here. How long has the Mace been around?
53 years.
How many?
53 years.
53 years, right? Yeah. 53 years. That's pretty impressive.
Yep.
I'm actually looking at the chart right here. This is I'm on a daily time frame. This actually has what's called a reverse head and shoulders pattern on it. Just kind of happened to notice that you got a shoulder here, a shoulder there, and this would be the head right here. But kind of an interesting looking pattern. The 50-day looks like it's starting to curl up. 50-day moving average, you're still below the 200-day, which is it's never good to see the 50-day below the 200-day. But I'm going to throw this out there that if the numbers continue to progress in a positive way and you stay cash flow positive, I would suggest that you're probably going to take out that 200-day, and eventually you'll get what's called a golden cross, which is the 50 crossing back above the 200, which is a bullish indicator, right? But I mean, look, we're dealing with high inflation. We're dealing with a lot of uncertainty. Everybody and their brother knows that a recession is coming. And I happen to believe in the camp that it's not going to be what everybody thinks it's going to be. Because when everybody knows what it's going to be, it's never what everybody knows. Okay. And everybody knows we're going into a recession. Everybody. I mean, the cab driver, the guy in the elevator, everybody knows that a recession is coming. I would suggest that the small cap, micro cap stocks have been in a recession for the last 6 months, maybe more, right? I think all of these moves that the Fed has made have not even priced into the market fully yet, right? These things take time to get into the market. And if he does it again, I think he's going to overshoot. That's my personal opinion. I look at car sales, what was it? CarMax one of them, the one with the vending machines. I can't remember what they're, but they missed their numbers by 40%, right? Homes in Nevada, we had on about 1,600 homes for sale in Las Vegas was the average. And now we're up to over 8,000 homes in a couple of months. And why is that? Because nobody can qualify to buy a home, right? So we are seeing the impact, and the supply chain issues that we had, I think they're dissipating, right? For a couple of reasons. Lower demand, and we worked out, not as much, we don't have as much COVID overhang as we had. So there's a lot of things here that are still yet to be developed fully. And I don't think this is going to be as deep or as long as some people are claiming, and that we're heading into this horrible recession. I think actually the market always is supposed to be thinking and pricing things 6 months out, which means that 6 months ago, the market started to tank because of what it saw 6 months from then. And we should be looking at what's coming 6 months from now. And I think, because there has been a lot of damage done, there are companies out there that are ridiculously priced too cheap. We overshoot to the top, and we also overshoot to the bottom, right? And unless the company is literally going BK, some of these companies that are cash flow positive, no debt. How are you on debt?
Yeah, as of the last quarter, we had about 800 grand borrowed against our line of 3 million.
Okay. So nothing substantial there. I mean, do you feel good about where you're at right now, Sanjay?
I feel good with all the initiatives. What I don't feel good about is the unknowns, the changes we see on the retail side. How much more deceleration we might see. I thought we were coming out of it, right? That's what I reported on the last call, and I hope we're coming out of it, but I'm not sure. There's no way to know what.
Well, if anybody, listen, if you did know, everybody would be calling you, right? Because I mean, nobody knows. That's the reality of it. Nobody knows. I mean, we're and that's what I mean with the uncertainty, right? And with uncertainty comes fear. I do believe that we probably have one more. I don't think we've seen the bottom in the overall markets, because I still think there are some big mega caps out there that are still overpriced. That's my personal belief. And I think we're coming up into tax loss selling season, right? People are going to take their lumps heading into the end of the year. So I wouldn't be surprised if we had one more big spike down, where really it scares the hell out of people. And that really should be probably the time you buy with both hands. Because a lot of these companies, there's a lot of companies that are way overdone to the other side, right? So there's opportunity. And I think in the next 12 to 24 months, there is going to be a lot of wealth created, because these companies, it's like stretching a rubber band, right? You stretch it up, it snaps back. You stretch it down, it snaps back. That's what's going to happen. And that's what the market has historically done, unless this is the end of the world. And then if that's the case, we have nothing to worry about, because this is the end of the world. So, right?
Right. So we have, we've lowered our break-even point. And if our organic, which was slowing down, we started going after new. Hence, we landed 4 new retailers this year. I don't remember the last time we had done that in the past. So we're all stacked up in terms of efforts, co-branding, new products, new arrangements, all of that to create a real, moat, to defensible, that yes, when the activity starts happening, we're ready to go. And then we've also worked on the plant, increasing the efficiencies in the plant. That has increased substantially. So now when the revenues do happen, we get busier. Yeah, I mean, the return on EBITDA will be substantial. But again, it's a much slower process than what we had anticipated.
Right. But it's a much different conversation when that does occur, though, right?
Yes.
Now you can breathe a little bit, right?
Yeah.
Right now you're taking short breaths, right? I mean, but
right.
That's what you have to do. I mean, that's business, right?
Right.
All right, Sanjay, look, I think we've made made a pretty compelling case. Nice introduction. What I want to do is I want people to follow the story. Put these guys on your radar, right? I mean, if you don't want to buy the stock, that's fine. Put them on your radar and let's see if they continue to execute, because really that's what it comes down to, right? Talk a good game, but if you do what you say you're going to do, that's when things start to get really interesting. So, I personally, at 10 cents, anywhere between 10 and where it's at right now, I think that's an opportunity to dip your toe, right? I'm not telling anybody to go all in. I'm not telling anybody to buy the stock. It's not what I do. All I do is present the picture of what's happening and the opportunity that is in front of us. And, is there a better risk reward setup there than is currently priced into the stock? I think there is. So, that's my opinion, and that and $5 will get you a pretty decent cup of coffee. So, Sanjay, when you have something that's significant, maybe we can have you back, do a follow-up.
Okay, sure.
Okay. And if anybody and any legitimate investors want to talk to you about anything, or inventors, they can reach out to you directly, right?
They can.
Okay. Perfect. Thank you so much for coming in and doing this, and I look forward to doing the next one.
Okay, my pleasure. Thank you for having me, Tim.
All right, hold on one second. I'm gonna shut this off. Thanks for watching today's interview with Sanjay Singh, CEO of Mace Security International Inc. Ticker symbol MACE. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.